Well, good morning, and thanks for joining us on today's webinar. We'll be talking to Kuehne Nagel and hearing how they've optimized working capital. And by doing so, they've revolutionized their supplier relationships. And in these times of, well, these strange times of increasing global uncertainty, it's more important than ever that we keep the wheels of business turning and really make sure that we're in touch with our supply chain as possible. And that's going to mean increasingly being a supportive partner. Putting a squeeze on suppliers in order to hold on to cash, for example, it can have a disastrous effect on the relationship, as well as causing some interdepartmental strains along the way. So this morning we're going to be hearing from Danilo Madarina from Kuehne Nagel and Jon Vass from TradeShift, who between them are going to discuss the approach that they took towards working capital optimization and some of the results that they had. So during the course of the webinar, you do have the opportunity to ask any questions. And I would ask that you put those into the chat box over on the right-hand side of your GoToWebinar panel as they occur to you. And so if you type those in as they do occur to you, either Danilo or Jon will address those questions at the end of this morning's session. So with that, I'd like to hand you over to Jon, who's going to take you through this morning's webinar. Over to you, Jon.
Thanks, Ellen. Hey, everybody. Thank you very much for joining. Nice to talk to you all. So just a little bit about me, first of all. I'm Jon Vass, Global Account Director for TradeShift, and I look after our airlines and logistics division. So basically anything to do with that market. This is by far and away our largest market, as some of you will know. And yeah, with me here, I'm very pleased to welcome Danilo. So Danilo, welcome.
Hello, everyone. Thank you, Jon, for having me here.
Cool. So Danilo, to start off with, why don't you perhaps tell everybody a little bit about yourself?
Sure. My name is Danilo Madarina, and I'm the Treasury Manager of Kuehne Nagel. I've joined the company in July 2019, and I'm based in Switzerland. I'm responsible for the global treasury solutions that we have in place, such as the supply chain finance program, which we are going to talk about today, our global SWIFT payment solutions, and also our global e-banking platforms. And well, I think before we go deeper into the topic, I would like to give you also a brief introduction about Kuehne Nagel.
Yes, that'd be great. Thank you. If you could, that'd be excellent.
Well, KN belongs to the world's largest logistics company and was founded in 1890. We are present in over 100 countries in more than 1,300 locations worldwide. In 2019, we had a turnover of 21 billion Swiss francs and total assets of 9.8 billion. We can rely on our 83,000 employees worldwide.
Wow,
let's move
company.
to the other slide. Yeah. Kuehne Nagel is organized into 4 business units, which represents the main modes of transportation plus logistics. Those are sea freight, where we are the world's largest sea freight operator. Then we have air freight, contract logistics, and overland. As you can see on the slides, we handle a lot of items and shipments. To give you an insight, in sea freight, we handle more than 4.9 million TEUs. In air freight, 1.6 million tons. We have in overland more than 30,000 departures in Europe, and we have over 11.4 million square meters warehouse and logistics space.
That's yeah, it's a huge operation, and we've been working with you guys for a little while, and it always surprises me, when we hear about, you're operating in some country where you think it's almost impossible, and you pretty much, you are spanning the entire globe at in such a huge way as well. So it's very, very impressive. And I think, yeah, exactly. And and I think the first thing we should be saying to you really is congratulations, because Kuehne Nagel have implemented an early payment program that's won awards, right? And there's not many logistics organizations out there that can say that. I mean, so I think the first thing probably people want to know is, what were the key reasons why Kuehne Nagel set about introducing an early payments program?
Well, we started to look into an early payment solutions around 7 years ago. For a longer period already, KN faced a changing working capital environment where customers are demanding longer and longer payment terms. So we are going away from this 30 days to 90 or even 120 days.
Yeah.
Therefore we had also to start to demand longer payment terms from our suppliers. But we realized that some of our, especially smaller suppliers, don't have the financial strength to grant us longer terms.
Mm-hmm.
So we started to look at an early payment solution, which would allow our suppliers to get access to cash earlier at cheap rates. And for us, it was also important that this solution, which allows fast payments, is convenient for our suppliers to use, and it's of course convenient for us to implement. I mean, I think this is the key reason for introducing this.
Yeah, and I think this is definitely something that we're hearing time and time again, right? So your customers are imposing longer and longer payment terms, therefore. Mm-hmm. You kind of, the initial reaction is you pass that on to your suppliers, but and I think lots of organizations looked at Kuehne Nagel and admire you guys because you didn't just pass that on, right? Which is kind of what tends to happen, and especially in a situation we find ourselves in at the moment globally, is that that's almost unethical to just to pass that on, and mm-hmm. It's really great. It's really great to see that actually taking care of your supply chain, and I know that for logistics companies, that actually your supply chain, you need that to deliver, your solution, right? And also, it's everybody is a customer and a supplier, almost everybody else, right? When it comes to transport and logistics, and so obviously yes. it helps you to help them, but I think ethically is a fantastic thing as well. So I think there's a lot of admiration to be had for doing that sort of thing, especially as you started your journey on this kind of 7 years ago, which was at that time it was a little bit less talked about. So you decided to do this. Who did you partner with, and why did you partner with them?
So next to Tradeshift, of course, that provides the platform, we have Citibank as our financing party. Back then, Citi was actually the only bank willing to work together with a fintech company. They agreed to interface with this external solution, and other banks pushed us to use their own platforms. I mean, every bank have their own supply chain finance platform, but we didn't want that. And they didn't want to exchange information with a fintech company. But nowadays this has changed. The banks increased their collaboration with fintechs, which I think is a good thing. And this even gave us now the opportunity to gain Standard Chartered Bank as a second financing partner.
Mhm.
And meanwhile, Citi is a strong partner, and we can rely on their support, fast onboarding of suppliers. And a very good thing is that we can even benefit from a revenue share. And next to the increased DPO that we have gained through this solution.
That's great. I mean, to get the revenue share as well, I think, also congratulations to Citibank. And I guess this is why you won the award, because, normally I think most of the banks would, of course, help you extend your DPO whilst getting your suppliers paid early or on time. And but getting the kind of revenue share back, is something which is actually is quite rare. And I think Citibank have done the right thing there by doing that, because obviously that will incentivize. I mean, you didn't really need any incentive, but that incentivizes organizations to actually want to do this and inject liquidity into the supply chain. Our suppliers are taking early payments from somebody, right? In a lot of cases, and paying quite a lot of money for it. And but the fact that they're able to do that with a bank like Citibank, and you're able to get a revenue share back, I think makes it valuable for everybody and for all parties. And you're getting a reward for doing what you're doing at the same time. So that's great. So, I mean, clearly, the feedback I've heard as well is the industry is very pleased with what Kuehne Nagel have done for everybody. But I mean, what difference has it actually made to your business, to Kuehne Nagel themselves?
The difference, besides to the positive working capital impact due to the improved invoice to cash cycles, is that the fully integrated solution enhanced also our internal processes and reduced the failures also on our side. We need less people to process the around 700 invoices we get each month. And where there is an automated process, the possibility for failure is much lower. And also the relationship with our suppliers increased. They like to work with us because they know they will receive their money in average within 10 days after they have submitted their invoices.
Yeah.
And I think we are one of the fastest paid customers of them. I mean, I don't think that the companies pay invoices in 10 days usually. And I think the process is also much easier on their side. They don't have to print out and send invoices via regular mail. So there is no possibility that the invoices get lost, and of course there is no hold up on our side. We are not slowing down the process. So that's a huge benefit from that.
Okay. Yeah, I mean, so it sounds as though you've got the benefit of automation, in terms of the trade shift part of it, and then you've got the supply chain finance part of it through Citi, which sits on the trade shift platform, which is automated, et cetera, and that's allowed you to pay your suppliers quickly through the financing program. But I think one of the most interesting thing, and that's something that you hear a lot in the market, and I think the people joining today could have heard that at any one of the webinars that they've attended maybe in the past 6 months on this subject. But I think the key thing that you said there is that it's improved your supplier relationships. So you're paying them faster, and within 10 days or even faster than that. So naturally what happens is they're going to look after you, and you're relying on a lot of these suppliers to actually deliver your product, right? You deliver to fulfill your contracts as well. And so it's a smart thing to do to look after your suppliers, because let's face it, and if a supplier has a choice between, think they've got a difficult day or a difficult week, like at the moment, right, with everything that's going on in the world.
Correct. Yeah.
If they have to prioritize, guess who they're going to prioritize, right? The organization that's going to, it's probably going to pay them a bit faster, right? Where the liquidity is key, at the best of times, and certainly under the current global environment as well. So, I think that's a huge thing, the improved supplier relationships, and something that generally does get ignored. I think a lot of organizations out there, maybe a little bit, it's changing a little bit now, but historically have been beating up their suppliers, and always saying, we want the service for cheaper, and we want to pay you later, and we want a better service, and it just doesn't work that way. And I think what you've done is created something which is reciprocal, where everybody benefits, and you've got a better relationship with your suppliers. You can help them innovate, all types of things that come off the back of that. I'm sure we could go down that route and talk about it. But what I'll do is I'm not going to pull it back into, I think probably the question I have now, and maybe everyone else listening, is, okay, this sounds good. What are the key ingredients to succeed with something like this?
Well, besides what I've already mentioned, I think the key element is that we offer to our suppliers an integrated solution which combines the e-invoicing with financing in just one platform, which ensures fast processing, again, no hold up of invoices, and reliable payment within a couple of days, and all this they get it for a low financing cost.
Mm-hmm. Yeah, and that's kind of the answer I'd expect you to reply with as well. So, for sure, it has to be easy for the supplier. Completely get that, and it has to happen in one place, right? They can't go to lots of different places to try and make it happen, because everyone's busy. It gets confusing. You can't do that with all your customers. But you're right to go with one place, and then it's also much cheaper than them having to take it to an invoice factoring company as well to buy their receivables. So that absolutely works. I think the key thing there is single platform simplicity and at a lower cost than an invoice factoring company, and all of a sudden you've got you've provided, I think, an incentive there for the suppliers to come and participate, and you're also doing this hand in hand with electronic invoicing, and everybody knows that electronic invoicing, onboarding suppliers to that has historically been tough, because you're saying to the supplier, well, I need you to submit your invoice like this. And some of them do and some of them don't, whereas it's a much better message to say, well, okay, that's fine, but we can get you paid early. All you have to do is this, and provide you some value, and all of a sudden you're going to increase your participation. So you're increasing the number of invoices you're receiving electronically, which is helping you, and you're helping the supplier in return. So again, it's this reciprocal thing, and that works for everybody, and I think that's really, really important. So thank you for that. Okay, so how about, would you be able to tell us, maybe sort of describe how the solution works? In which case, I think there's lots of people out there that probably want to understand it from a workflow perspective or a technical perspective.
Sure. The flow chart that we can see here shows in the upper part the e-invoicing solution which already existed, and in the lower part we then build additionally the supply chain finance program. So with other words, we leveraged the already existing e-invoicing solution with Tradeshift and build on top of that our SCF solution. Very important to consider is that Kuehne Nagel has globally its own in-house built ERP, which allowed us to easily expand the program to other countries after the successful pilot. I think it helped us a lot that we have everywhere the same ERP in place. This makes everything much easier.
Mm-hmm.
Well, let's go through the individual steps. Let's start with number one. The supplier sends the e-invoice over the Tradeshift platform. Important here is that the supplier needs to provide single data points of the invoice. We are not talking about PDF or scanned copies here.
Mm-hmm.
Then this invoice will be submitted directly into our ERP. And in the best case, so we are now in number 3, in the best case, the invoice is matched directly with our PO number and will then approved automatically if everything is correct. If there is any difference, amount is wrong, date, whatever, then our respective person in the company will be contacted by the system for checking and approval. Once the approval is done, the system then automatically sends the approved status back to Tradeshift, and then Tradeshift forwards their remittance advice to Citi. And we are now in number 6. Citi then pays the supplier. In the best case, if everything went through automatically, then the supplier gets the money within 3 days. In average, they receive the money in 10 days, which I think is still quite quick.
Definitely.
Then of course, the supplier can check on the Tradeshift platform the status of the payment with all related details all the time. Last point: Citi debits our account automatically on the agreed payment term, and this is usually 90 days later.
Excellent. Okay, so I think the main thing here is the automation involved. So, you're coping with a large volume of suppliers, all receiving financing, and what I'm seeing here is the real key there is automation. If there was too many manual steps, then of course, then that's going to restrict the amount of supply chain financing effectively you can cope with, right? So, okay, yeah, absolutely. And you mentioned payment in as early as 3 days as well. So. And obviously, if there were manual steps in there, then there'd be no payment in 3 days, and I think we all can appreciate that. And one thing you mentioned at the beginning of describing this is the invoice being electronic, not paper or PDF. So, I mean, well, why not? I mean, why does it have to be electronic? And how important is that versus receiving a paper or PDF invoice?
Well, this is crucial to us. I mean, the fast and in some cases even touchless processing is very important to gain effectiveness and to make sure that the supplier gets the money as soon as possible. If we would receive PDF copies, you can imagine we would still need more people that go through the invoices and will enter the data from the invoices into the system. And this would slow down everything and give again possibility for errors. And nowadays, with the solutions that we have in place, with the different techniques, I mean, it's just possible to get the data points directly. I mean, Kuehne Nagel currently receives 700,000 invoices a month, and 300,000 of them are submitted over Tradeshift. You see, we have here gained a lot, already reduced our paper pile by almost 50%. And 10% of those invoices are running touchlessly through our system, so nobody is touching them. And yeah, just to give you an idea where we stand at the moment.
Yeah. Okay. Yeah, that's very, very clear. I mean, you know, to have that touchless processing and to receive everything electronically is clearly key. You know, if you had a PDF element of that, I mean, some people would describe a PDF as electronic, and it's basically, it's electronic paper, if you like. Certainly, I think you're talking about having actual metadata coming into Kuehne Nagel that you can use in an automated way. So, okay, I mean, I think a lot of people watching this would be quite envious of what you guys have done, and this is pretty good. But what's next? I mean, how do you see this evolving?
Yeah, our program is actually live in 18 countries, in Europe, North America, Asia, Middle East, and we have currently on board more than 500 suppliers with a monthly average of around 28,000 invoices. And I mean, that's still a small part, and we are currently working on the rollout in further countries in Asia together with Standard Chartered Bank. And we are also evaluating possibility for our suppliers in South America. And of course, one of the never-ending tasks is the further simplification of the onboarding process together with all parties. I mean, at the beginning it took us very long to onboard suppliers, but this is getting now faster and faster.
Yeah.
And Jon, what has Tradeshift in the pipeline?
Well, I mean, I think you just raised an interesting subject there, which is around, okay, so you've got Citibank on board, and we just talked about Citi being an exceptional partner, and the fact that they're giving you a revenue share, and that I know that they're actually quite fast to onboard a supplier, which means you can pay somewhere between 3 and 10 days, which is fantastic. But then it's kind of, you're saying, right, we want to roll this out further, and you need to bring other banks in, and I know that Chartered Bank is another great partner, but as I suppose you go into different parts of the world, you're going to need more and more partner banks, right? More and more financiers, and this is where it really gets tricky, because I think Citi are an excellent example of a bank who makes it easy for people to work with them, and there are others out there too, not just Citi, but in our experience, a lot of the banks are still they're quite slow to get on board, to get the supplier verified. They have a KYC process that can take quite a lot of time for the supplier to be verified and for them to be brought on board to a platform. Typically that slows the whole thing down. So what we've done is we've brought a product to the market called Tradeshift Cash, and it's essentially very similar to what you're doing. It's the same thing, right, that you're doing with Kuehne Nagel. What it does is allow us to utilize different funding sources. So as you're rolling out around the world, what we can do is we can use various financiers, and they don't have to be banks. So they could be hedge funds, for example, on other non-bank financiers to fund transactions on the network. And what this means for you is just a lot quicker, right? It's a lot, you talked about supplier onboarding. It means it's a lot simpler to onboard a supplier to do something like this. And what we're doing is we're speeding up their access to liquidity. So some of the non-banking financiers, what they'll do is they'll actually fund a transaction based upon the trading history between the supplier and yourselves, so the supplier and the buyer, and not necessarily go through a huge KYC check. And that means we can have the supplier funded in some cases in 2 days, right? And that would, of course, on 2 days, that's probably on a non-approved invoice, right? So and still at a cheaper rate than it would be as if they had to go to a factoring company to get this done. So providing the similar benefits as you've had with City, they'll be able to take that and roll it out into across the world, and perhaps areas that where City might not be able to help in, or perhaps you need additional credit lines, etc. So and of course we're then providing you with a revenue share as well, right? So you still get the revenue share, you still get the supplier on board quickly. They can perhaps get paid even a little bit earlier in some cases, which is great. And the other part of this is you have the option of switching it between your own funds and the network funds, and also different funders. So at times of high liquidity for Kuehne Nagel, you've had a busy period and you collected on your invoices. Your treasury might be thinking, you guys might be thinking, okay, well, how do we best use these funds? What you can actually do is you can set aside a certain amount of funds to be put into this program. So you're feeding back into your supply chain. You're helping your suppliers. At the same time, you're generating revenue from doing that, instead of necessarily the bank generating revenue from it. And then as soon as the amount of funds you set aside to do that has been used up, it just automatically flicks over to network funded. Okay, so for the supplier, it's a completely seamless experience. And I think with traditional buyer-funded programs, what happens is either on or off. So when the buyer can fund, it's on. When the buyer can't fund, it's off. And that really frustrates the supplier, because they just want to be able to, rely on the fact that they can get their invoice paid quickly. Whereas this toggles between, your own funds or different funding options on the network. The supplier doesn't really need to know too much about that, other than the fact that getting paid early. So yeah, that's something we're bringing out, or we have brought out, and we're rolling out, let's say. And at the moment as well, we're sort of taking our responsibility as part of helping the global economy. Clearly, I don't think it's any secret that this is revenue generation for us, as well as being able to help out buyers and suppliers. But what we're doing up until the summer, with everything that's going on at the moment, is we're actually not going to take any revenue beyond cost. So we're not going to make any profit out of this. We're actually going to do it at cost for the supply chain for the global economy until the summer, and hopefully this what's happening now will have quieted down a little bit, and everyone will be back to normal. So just to help that. So in terms of how it works, I think it's very similar to the model that you were talking through. The buyer sends an order via Tradeshift, or of course, very minimum, the invoice comes from the supplier into Tradeshift. The buyer essentially makes a payment, but that payment could be made through using either the buyer's cash or a third-party finance option, or Citibank as well is part of this ecosystem, and then they have the suppliers funded. So very, 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 very similar model, and of course relies on all the same things that we've talked about. So I mean, how does that sound in terms of what we're bringing out to the marketplace?
Well, it sounds very great. I think one big benefit is the flexibility of choosing the funding type, to fund it with our own cash, or to select between the funders. That sounds quite interesting.
Absolutely, yeah. That's what we're trying to do next. Make it as flexible as possible. Okay. And so, I mean, I think this is all about creating value for the supplier, right? So, and you touched on onboarding, and I think we all recognise that onboarding supplier to any type of incentive is a challenge, and being able to bring these things forward as as incentives is really, really key. Some of the other things that we're doing and what we continue to do, as you probably know, is allow the supplier to create and maintain a profile on Tradeshift and connect with new prospects and collaborate with new customers. So that they can increase their profile, and they can essentially sell more things or provide more services via all these connected organizations on Tradeshift. So as you know, many of your suppliers are also buyers on the network, and many of your competitors are also your suppliers and your customers, right? And it's the same for your supply chain. So they're also trading with them in one place, which is really, really key. There's not, they don't have to go to different portals and different places to deal with all of their buyers and suppliers. And as we mentioned, we're also keeping the cost of finance lower, providing an incentive to join and a visibility into transactions on the network, as well as continue to keep providing the type of value that we have done, right? And in terms of being able to connect back to the supplier's ERP or CRM or accounts package to avoid double keying. We don't necessarily want them having to use Tradeshift and replicate everything in their finance package, or we connect back into it. So and there's other apps that they can use around sort of purchasing, billing, logistics, which are generally free for them to use. Again, so they can enjoy the benefits of being on a network and having an incentive, and we provide them enough value for them to come and connect with you, and to make all this work really without them being there in this place. None of this would work. So that's what we need, is to provide the value to attract them to come and use it.
Mm-hmm.
Okay.
So
all right. Yes, thanks very much. A really great conversation between the two of you, Danilo and Jon, and I really hope that everybody on the webinar this morning has got a really good idea of how similar strategies can work for you, and how useful that it is to have in your own toolkit. And I think, Jon and Danilo, I think for me some of the key words that you've said there are flexible and something which is easy. I mean, once something's easy to use, then of course it's taken up by more people, and making sure obviously that it's reciprocal, and that it's something that everybody can gain from. So we have had a couple of questions in. So first of all, to you, Danilo, did you select your top tier suppliers to test the process before rolling it out more widely?
Well, yes, of course. We did a test, but with only one major supplier in the UK actually, and as everything worked perfectly already from the beginning, we decided then immediately to go live. Yeah.
Okay, well that's great. And also we've had another question in from somebody. To you again, Danilo. Was there any pushback from either your team or any of the suppliers?
Yeah, good question. As we all know, it's always difficult when you come with something new. And we had a lot of pushback from suppliers first. They didn't believe that the solution works well, and of course the additional effort that they had for the onboarding and contracting with the bank also blocked them from joining. We had to put a big effort to convince them, but today, nowadays, let's say, as our solution is now well known and also awarded, it's much easier to get them on board.
Yeah, sure. And I think, just the kind of times that we're in at the moment make people more interested in looking at different solutions, right? I mean, I think we're all looking at our supply chains within our own organisations, and trying to find some innovative things that work. And this obviously works for you, as you've been an award-winning system. So to you, Jon, someone has asked, does the Tradeshift solution work with any ERP system?
Yeah, very, very quick answer really is yes.
Yeah.
Of course, we have, the most integrated with solutions such as SAP, Oracle, Microsoft. Those are the ones you'd expect. But there are some homegrown systems out there, and other maybe call them tier two type of ERP systems. But yes, I mean that kind of thing is actually it's within our control, and in the main it's actually quite a simple process. I mean, we have we've got a piece of middleware. We actually bought the company, so you might have heard we bought Babelway last year, which is a middleware company. We were their biggest customer, so we thought it was a good idea to buy them when they went up for sale. And so basically it means we can integrate with anybody. And actually, that part of the project is something we get asked about a lot, and I think a lot of organisations tend to have a lot of concern around that, about the integration, and of course that has to be right. I mean, it's not going to work without that, and that's a critical part of every deployment. But I mean, what I would say is, yes, focus on that, ask all the questions around that. We can show you that we can integrate with any system, that's fine, but actually that isn't the biggest challenge when it comes to something like this. The biggest challenge is getting the suppliers to participate, and a lot of focus tends to go on the integration. And my advice really around that, I think, is yes, focus on the integration, but don't make it your main focus. Make the supplier onboarding the main focus, because believe me, onboarding the suppliers, that's the toughest part of any type of project to do with your supply chain, and it will be by far and away the longest part of the process that you're going to have to go through. So concentrate on that. Yes, look at the integration, but focus on that as your main thing.
Okay. All right. Thank you, Jon. We have had a number of questions from people really asking about the type of the banks that you're using, and also wanting to know a little bit further about payment terms, etc. But I think in the interest of time, I think we'll take those offline, and we'll certainly get all those questions answered for you. And we have also had questions about the recording and the slides. Yes, they'll be available to you, so we'll send those directly out afterwards, and we'll mail those across to you. So thanks to everybody for joining us this morning, and particularly thanks to Danilo and also to Jon for a really interesting and insightful conversation between the two of you, and some really good points that you've made. And if anybody does have any further questions, then you can email them through to me, and we can make sure that we get those answered for you. In the meantime, thanks very much again for joining us, and enjoy the rest of your day. And I hope you'll be able to join us for our next webinar coming up on the 24th of March. So thanks once again to Danilo and to Jon. Thank you, and everyone for joining us. Thanks. Bye-bye.